This is entry 3 of the Trading Journal series. Today is March 1st, and it's a New York session. It's a New York session following this very expansive move down from 37,000 all the way up to 44,000 that we saw yesterday. This is one of Bitcoin's most volatile days in recent history. I think you have to go back. I think to get a range expansion that large, you have to go back to February of last year. But anyway, this is almost 20% expansion on the day. That's significant because in the first video we kind of talked about the previous 3 days expansion and keeping an eye on that. 3 days ago we had this expansion here, which is roughly 15%. And then we saw the following day, volatility tapered off, um, uh, with the daily range of 3.78%. Then the following day was 5.98%. Um, and then finally, volatility expanded again, picking up and hitting that 20% mark, uh, expanding greater than the day that we initially broke our structure with that 15% move. So you have your 15% move here. If you go down to the lower time frames, you see this. And let's see, mark this off here. Or roughly 17% or so. But to just frame this in the higher context, we have this support here. Price comes down to support. Volatility expands. Then we go to low time frames. Starts taking out these highs right here. See, it takes out these highs. Bases off these highs, pushes down a little bit. If you go back to the first video, you can see that I sort of framed a bullish bias based off some of the price behavior here. Albeit I did take profits a little bit too early on that trade, but I was able to frame this bullish bias. And if I reference the high time frames as well, my bullish bias still remains intact. But currently I'm in a short trade now. I'm in the same short trade I was in from last night, based off this point of release area here. You can go back to the second entry to see more of my logic for entering this trade. But this is a great trade, kind of just symbolizing that, just as an exercise to trade contrary to my bias, right? Overall, on the high time frames, I'm very bullishly biased. But you saw a 20% expansion. This is not a strong move, right? It didn't. Well, again, I wouldn't look at it as strength in the sense that it moved very impulsively, right, without retracing at all. And that's the type of move that I like to trade into. So, price moves expanded 20%, and it took out all these different price distinctions along the way, right? Without a retracement, and it comes up all the way to this level. So the trade idea was based off the point of release concept I've covered in previous videos. The idea is that this is an area where a lot of sell offers hit the market at the same time. Price expanded aggressively. The market dynamics changed, and you can mark off this level as a relative price distinction. Thinking that if price returns there, that you're likely to see a reaction. Now, in this case, price moved very impulsively into that level, so and filled the price gap too. And I did a previous video, kind of documenting, how I use price gaps to reset directional bias and kind of step away from the market and reassess. So this is a great example of that. If you're long here, this would also serve as a great take profit area. Now, this trade's moving against me in the last few 15 minutes here. You can see here, these buy limit orders right here are more or less just take profits with the expectation to flip long. if price reaches down to this level. But yeah, you can see here, I missed my first profit by about $50. It's not the best feeling, but this trade is still yet to play out. So we'll see what happens. Ultimately, I do want to flip long and get a trade in the direction of the higher time frame trend. But again, if I see an impulsive price move into a trading gap like this, typically I'll take the other side of the trade just as an exercise. Now, as if this level were, so right now we have a price traded above these highs here. So this could potentially be a stop run, but we haven't seen the type of information that would make us think that yet at this point. What I'd want to see for confirmation on that is right, if we mark this off, mark this price level off, and we'd want to see price run above and then come down and take out these low time frame lows. If price comes down and trades below 43,400 roughly, that's a good sign that this is at least an intermediate term top right here, and we can expect some of this price action to get retraced a little bit.